Hey, what is going on, guys, and welcome back. I'm gonna go into some bad news today for some of you all, but why you could put a positive spin on this and actually make out pretty well. But first off, if you're not subscribed, go ahead, click the subscribe button below, and make sure to give this video a thumbs up. That would greatly help out our channel. We kind of do these videos for free, so if you could just go ahead, hit the like and the thumbs up button, that would be a way you could pay me back for making this content for you. So first off, I'm going to go into a couple of different things in the market that I see and what I see happening here in the near future. So in the past couple of weeks, we've seen some uncertainty in the market. We've seen coronavirus cases going up. We've seen no stimulus kind of in sight. We've had quite a few companies have bad earnings, and we've had quite a few companies have good earnings. So it's kind of been a crazy couple weeks. We also have the election on kind of the side here going on, and there's a lot of uncertainty, and I'm going to break down what I think is going to happen in this market based on technical analysis, and then we're going to go into kind of the other side of it, where we're going to break down the events that are going on right now in politics, the stimulus, coronavirus outbreaks, and what I think is going to happen with all of this, and why I think the market's going to do what it's going to do. So first off, let's go into technical analysis. If we look at the daily chart for the last about year, what we're going to see here is that we basically peaked. Okay, after we peaked a second time, we didn't peak over previous highs, which first off is a bad sign. We did not peak over previous highs, which really does not show that this market is a bull market. It shows that it's kind of bearish. Now, second off, we dropped very fast, okay? We dropped from almost 29,000 points all the way back down to 26,000 in literally less than like a week or two, which is crazy. That's a crazy fast drop. Now, normally, I would say, look, we're at a decent support level, but the problem with what's going on right now is there's a lot more than just technical analysis going on in the market. And I'll break that down here in just a minute. But we dropped very, very fast, which also leads me to believe that it's probably at some point going to drop through this current support level. How low do I think it's going to go? In my opinion, I think it's going to drop all the way down to at least the 23,000 level. Anywhere between the 23,000 and 25,000, I think it's going to drop. Why do I think it's going to drop down to there? Well, it looks like a pretty heavy support level, to be honest. I do believe that the market is not done dropping yet. We are in kind of a descending channel. I've had a channel broken down on kind of the stock market for the last 6 months, okay? In the last week, it has broke that channel. It has never broke that channel in the last 6 months. And I can actually chart it out for you and show you. It's on my phone. Actually, here's a picture of it right now. So as you see, it broke the current channel. And as it continues to break this channel, I do believe that we're falling back into a bear market, and we will kind of see this this market start to level off, start to average out, before probably going back up. So we're going to see this market come kind of to a normal level, in my opinion, back to kind of a level where the market kind of belongs at its current state in the next probably month to 2 months, okay? And this drop could be quicker than that, because our last drop was really, really quick. I mean, it happened in, I'm going to say it went from like 30,000 points to 18,000 points in like 2.5 weeks. But I do believe that in the next several weeks, you're going to see the Dow continue to drop. All right, so let me break down a couple things. So we saw on Friday, we saw companies like Apple actually lose uh, money on their shares. The reason they lost money on their shares is because, in my opinion, people are scared of the iPhone sales being down. Their revenues were up, earnings were up, everything looked good, but one thing was off: their iPhone sales. And because people, I guess, don't want to pay that much for an iPhone, um, the new iPhone, we'll put it that way, um, it really dropped their stock price. It really hurt it, despite them having positive earnings and everything else. This market's kind of crazy right now. Google soared. Google did really, really well. Amazon actually did really, really well, and they did. I want to say they did like $13 worth of EPS, and they shot down. That's because this market right now is expecting so much out of the tech giants that it's absolutely stupid. Um, so that's kind of that. Now, as I said before, I do believe we're dropping down to this 24,000 point level. I do believe that will happen over several weeks, and I do believe that we'll probably rebound from that level. So if you are holding money right now, I would consider probably every 1,000 points dropping some of it into the market so that you don't miss out on the move, because the move can happen fairly quickly. Like this last move, we dropped, the stock market literally dropped out in like 7 days. So we dropped from like 28,000, almost 29,000 points to literally 26,000 in like a week. So, which is kind of insane. All right. This market is very volatile. It's moving very, very quickly. And in my opinion, you should really take advantage of things while it's down. Do I believe it will continue to drop? Absolutely. Do I believe that you should cost average in so you don't miss some of these drops? Yes, I do believe so. All right, let's jump into kind of the next thing, which is the political side of things. People are very uncertain of the election and the outcome of the election, what it's going to be, due to the fact that, I mean, it could be Biden or it could be Trump. Back in the Bush election, we did see a very similar thing happen with the election. It was very close, or I believe, I can't remember. It might have been Kerry, but literally the Democratic side was ahead quite a bit in the election, and then all of a sudden, out of nowhere, the Republican side won. We could see something like that happen again, or we could just see a straight Biden win election. And people are very uncertain of what's going to happen due to the fact that Biden is launching a new tax plan and everything else. I mean, with Trump, we kind of know. We just lived that for the last 4 years. Biden is coming into a market where we have not necessarily seen what he wants to do in action yet. Okay, in my opinion, as a trader, as an investor, I'm more comfortable with Trump winning. Okay, as if Biden comes in, I do believe that it might not necessarily be the time to launch a new tax plan. The tax plan has worked for the last several years. Companies have done really, really well during this tax plan. And I think spiking their tax plan, their taxes during the middle of the Rona and the downturn, the economic downturn that we just had, I believe would be a very poor decision. But it might end up happening, right? Biden might end up winning. I mean, he is ahead in the polls, but that doesn't mean anything. You know, it's kind of like don't think you've won until you've actually won. You know, don't count your chips when you're at the table. You know, so yeah. I do believe that if Biden wins, there's definitely going to be some investor uncertainty in the market, and I do believe that we may drop even a little bit further before it starts to recover. If Trump wins, I do believe that we will see this recover somewhere around the 24 to 25,000 point level. And let me cover why it will drop even if Trump gets in. No matter who gets in, I believe it will drop. Okay. The difference is going to be the recovery time, in my opinion. Okay, if you're looking at a Biden win, you're going to be looking at the larger companies having a rougher time. Okay, trying to dig themselves out of the hole that they're currently in, because this, we got to understand that this, they just went through a massive drop, massive spike. Complete shutdown. Some of these companies went into years of debt. Okay, so if Biden launches his current tax plan, I do believe that it will cause a lot of companies to bankrupt. It will cause a lot of them. If we see which will also cause the market to come down quite a bit. If we see a Trump win, I do believe that we'll continue to see some level of support for companies. I believe we'll see some level of tax relief for them. And even though I believe it will come down, I think we will see a fast recovery time. Why do I think it's going to come down either way? Well, looking at technical analysis, it's probably coming down either way. Looking at the election, normally elections drop the market no matter what, okay? No matter what happens, almost always, because there is uncertainty in the market, usually elections and a couple weeks or maybe even a few weeks to a month afterwards, usually the market just continues to drop, okay? There's always a little bit of a slowdown in the market around election time. Why? I don't know. It's just kind of the historical past of what has happened, okay? Now, we're also looking at spiking Rona cases, okay? Because we're looking at spiking Rona cases, that could also bring the market down a little bit as they have new enforcements, as there's more fear developing in the market, and as there's more uncertainty due to the fact that coronavirus cases are definitely going up, okay? Which we did expect to happen in the fall anyways. So this normally should be factored into the market, but as of right now, it is not. In my opinion, that's one of the reasons the market's coming down a little bit right now, is because of those spiking cases. Due to the fact that they think there could be another shutdown. I think it'd be a very poor decision, as we saw previously this year. It did hurt our economy a lot, and people's lives are important, but our economy is also important, right? If we have millions of people without jobs, without an income, we will see a lot of suffering in the U.S., and it could cause somewhat of a next Great Depression. If we go ahead and we shut down on the other side, the less than 1% of the population that does get sick off of this and possibly die might survive, might survive a little bit more. Either way, I don't see it really affecting the U.S. population at all. I believe that as coronavirus speeds up, the death toll will also decrease to less than 0.5%, in my opinion. So I do believe that a shutdown, in my opinion, would be very poor. Okay, I do believe that in the near future, if we were to see a shutdown, it would cause an economic collapse of the United States. Now, let's continue through this. We've also seen Congress, basically the bill for stimulus, just continue to get delayed and delayed and delayed. This is also a very bad sign of the economy right now and where it's kind of going. The economy is recovering. Numbers are coming out that are good from certain companies, and we are seeing some signs of stabilization in the economy right now. In my opinion, that's what's going on. It's trying to stabilize to a kind of normal level and stop being so volatile. But as I said, I think we're going to continue to see a downturn because we have no stimulus. Two, we're right before an election, and after the election, normally in past years, it pulls it down. There's also uncertainty as to who's going to win. And on top of that, Rona cases are up as well. And we're looking at the technical analysis, and we're looking at, hey, this dropped really, really quick, and we think it's probably going to push through the current support level because it smashed the other support level, in my opinion. okay, which is the 26,600 level, kind of smashed that and went straight down all the way down to 26,000 flat. I do believe that it's going to continue to drop. How much that determines that's kind of based on, in my opinion, probably who wins the election. Okay, who wins the election, how bad Rona gets, and if companies continue to do all right within this this market. Because as I said, it is a rough market. Tech companies are doing very well, but a lot of other companies are, on the verge of bankruptcy. Okay. Well, anyways, guys, so that's what I think is going to happen in this video. We did see a crash kind of in the tech industry on Friday. So if you wanted to start buying in, I actually started cost averaging into the market on those positions. Always kind of trade at your own risk. The positions that I am currently holding are long-term positions. I don't plan on selling them anytime soon, and that's why I did cost average in on Friday. I did drop several $1,000s in the market on Friday just because I believe that it was a really good buy. As it continues to go down, as the market continues to go down, I will continue to cost average in. I would tell you to do exactly the same thing. But once again, I'm not your legal advisor, and you should definitely seek out if you think that this is a good or suitable option for you. You should seek out help from someone who you believe is in the position to tell you what you should or should do, maybe an accountant or financial advisor of some sort. But I do believe that it's a good time to buy in the market. Do I believe that it will drop further? Probably, but as I said before, it's very hard to call tops and bottoms in the market. It's very hard to say that at 29,250 points in the Dow, it's going to drop and spike down to, 26,000. It's very hard to call that out on the spot and be like, yeah, boom, got it. You know what I mean? So that's why I'm cost averaging in right now. You could do the same if you really wanted to, but that's what I would suggest doing. But as I said, I'm trade at your own risk. Okay, this isn't legal advice or this isn't financial advice. You got to do what's best for you, and also don't ever put money in the market that you feel you're gonna need within the next 6 months or next year, to be honest. All right, guys. Well, anyways, that's it for this video. If you got some value out of this video, go ahead and hit the subscribe button. Also, feel free to hit the like button. That would really help out our channel. As I said, we do these videos kind of for free to help you guys out and give you guys an understanding of what we think is going to happen in the market. We're going to continue to do these videos, assuming that we have some sort of response from you guys. So if you would go ahead, hit that like button and hit the notification bell, we'd really appreciate it. And until next time, guys, see ya.